Hey gang, Dennis Tubbergen here with another market update. Today is Thursday, May the 3rd, 2018, and I want to talk to you today just briefly about what's going on in stocks. A few important developments here, and there's lots of stuff going on this daily price chart of the S&P 500 index that I have on the screen in front of you. Now, if I start with the purple line here, the very bold purple line here, and I zoom in a little bit, you see that as I zoom in, that prices have recently started to drop below that line. In fact, they're below it again today. Now, we have not had only one close below that line really in the last couple of years. That line is a 200-day moving average, and it's a pretty significant technical indicator used by a number of different market analysts to determine whether the market's in an uptrend or a downtrend, and there are many institutional managers that use that as a buy and sell signal. So just taking a look at today's price action, you can see that the 200-day moving average is at 261492, and as I'm recording this shortly after 11 o'clock Eastern time, the current price in the market is slightly below that. It's 2606. So we're seeing a little bit of a drop below that 200-day moving average. That is bearish. If we see a couple of closes below that, that can be a pretty significant sign that the market trend is starting to change. Shorter term, if I zoom in even a little bit more, however, if you take a look today, prices have gapped down a little bit. Typically that means that often that price gap is closed. And the other thing that you see here on the lines that you see kind of on either side of the price movement, those are two standard deviation Bollinger Bands. A Bollinger Band just kind of shows you price extremes. So we're at a price extreme again today with prices declining not only below the 200-day moving average, but also to the bottom Bollinger Band. And you see that prices have been lower already today. They've rallied a bit. That bottom Bollinger Band is really acting as support at this point. So short term, we could see a little bit of a price bounce, but it does appear that markets are breaking down. And if you take a look at this, we do have a descending triangle pattern that I talked about on a prior market update. That descending triangle often is an indicator that we're going to see more downside ahead. So short term, over the next couple days, wouldn't be surprising to see a little bit of a price bounce with prices at that Bollinger Band extreme and a gap down. However, longer term, it appears that stock prices may be starting to break down. And what we're really paying attention to is this line here at about 2574. So if we see another 25-point drop or so in the market and we see this penetrated to the downside, I think we could see a pretty significant correction, at least 10%. That's today's market update. I'm Dennis Tubbergen. It's Thursday, May the 3rd, 2018.